Welcome to the Asia Global Dialogue 2022, brought to you by the Asia Global Institute at the University of Hong Kong, where we present Asian perspectives on global issues. I'm Alejandro Reyes, the Institute's Director of Knowledge Dissemination. It's evening here in Hong Kong, and true to form, we're still at work, in business, plugged in, and connecting with the world. This is the second part of the Asia Global Dialogue, which began this morning with an in-person and live-streamed event here at the HKU campus. I have to say, the atmosphere in Lok Yew Hall was electric. No batteries required. Participants from Hong Kong and overseas were thrilled to be meeting face-to-face again after 3 years. And we were much energized by the presence of our 15 Asia Global Fellows from 15 countries around the world, who are today winding up their 10-week residency in Hong Kong, physical residency in Hong Kong. We had an address by the Vice Chancellor and President of HKU, Dr. Zhang Xiang, and a video message from the Chief Executive of the Hong Kong Special Administrative Region Government, Mr. John Lee Ka-Chiu. We then had two sessions. The first, headlined by Nobel laureate and Asia Global Institute Advisory Board Chairman, Professor Michael Spence, took stock of the global economy with a particular focus on the US and China, as well as the impact of technology. And the second session, with a keynote by Asia Global Institute Distinguished Fellow Andrew Shum, explored the path to green growth with a focus on the urgent need for action, the role of the financial sector, and the impact of digitalization. There was positive news this morning. Despite the geopolitical complications of the moment, despite the economic challenges of high inflation and rising interest rates, there were signs that technology could bring a significant fillip to productivity and growth, and that the financial sector was finding ways to finance or fund green growth initiatives, even though the world may be falling well short of the emissions targets needed to limit global warming. This evening, we are all online to reach our global audience. We have another two sessions and a short closing. The first, which will be chaired by Dr. Victor Fung, the chairman of the Asia Global Institute, will look at Asia in a changing economy, the future of finance, and the challenge of inequality. The second, which I will moderate, will examine the deglobalization narrative, deglobalization debunked, decoupling or recoupling, shaping a new globalization. Afterwards, please stay online for a short summing up discussion with Dr. Victor Fung, Professor Michael Spence, and Asia Global Institute Director, Professor K.Y. Tang. So let's get started. It's my pleasure now to introduce Dr. Victor K. Fung, the chairman of the Asia Global Institute. Victor.
Hey, thank you very much, Al. Well, first of all, I'd like to extend my personal warm welcome to all of you, our global audience. It's really a great pleasure to be with you on the web. I can't help but reinforce what Al said about the electric atmosphere that we had in Lok Yew Hall this morning. It is the first time we were able to meet in person. It really continues the message that Hong Kong is back in business. And we really like to just say again that we are open for business in Hong Kong and really look forward to all of you visiting us in person. So tonight, I think we're really going to have a very good time with our panel of experts. But before we get into that, let me just say a few words. As I mentioned in my opening remarks this morning, when it comes to challenges for the global economy, and for humanity, for that matter, I think financial inequality, in my mind, is top of my list personally. You know, according to the latest global wealth report by Credit Suisse, North America and Europe together account for about 17% of the world's adult population, but 57% of total household wealth. The world's richest 10% own 82% of global wealth, while the bottom 50% of adults account for less than 1%. So you can really think what the situation is like. And in fact, the pandemic has only accentuated inequalities. It has widened not just the wealth gap, but also the gender gap. According to World Bank, close to 100 million more people were living on less than $1.90 a day last year. And with women really bearing the brunt because of the lost opportunities to earn money to support their families. So we really are exacerbating these inequalities. If left unaddressed, this level of financial inequality, I think, unfortunately, coupled also with climate distress, will continue to drive mass migrations, I think, from the poorer to the richer countries, and to unfortunately ferment social unrest and political instability within countries and across the world. So it is neither systemically nor morally sustainable. And that's really the topic that we want to have our experts address tonight. Now, global financial systems and markets have traditionally been a part of the problem, frankly, that has exacerbated this. It's a barrier to entry, which is very high for the world's least wealthy. But I think in the digital era, I see a ray of hope. The international finance with this digital solution can, I think, very much become a part of the solution and really to bolster financial inclusion. So today, we have a distinguished panel of experts and really operators who have a wealth of experience to address this topic of financial inclusion. This is really from multiple perspectives. You can find the detailed biographies in the AGD website, so I'm not going to repeat them. But let me now just welcome, first of all, Laura Cha, Chairman of the Hong Kong Exchange and Clearing Limited, and until earlier this year, a member of the Hong Kong's Executive Council. Welcome, Laura. And Laura and I were actually in the Middle East just recently with the financial secretary, and she may touch on a little bit on some of the things that happened there and what it meant to the whole question that we're exploring. Eddie Yu, Chief Executive of the Hong Kong Monetary Authority. Welcome, Eddie. This is our Hong Kong Central Banking Institution. Eddie is really a veteran of tackling major financial crises impacting Hong Kong and has really played a key role in really enhancing the linked exchange rate system, which has kept us in such good stead over these years. Ma Jun, welcome, Ma Jun, Chairman and President of the Hong Kong Green Finance Association. He is well known with his long career in Hong Kong as an investment banker and then also on the mainland with PBOC. He is the leader of green finance development on the Chinese mainland, as well as Hong Kong. And Jun has deep experience also, obviously, in international banking and have taken a very active role in the G20. And he's going to tell us a little bit about the latest things that are developing there. And then last but not least, my good friend Sam Palmisano, Chairman of the Center for Global Enterprises in New York. This is a private nonprofit research institution devoted to the study of contemporary corporations in a globally interconnected world. Sam, of course, is well known to us as the ex-chairman and CEO of IBM for many, many years. And many of us have been Sam's clients and friends for long, long years. And I'd like to also welcome you, Sam. So in order to frame the discussion, I think I'd like to just mention just three thoughts that occurred to me as I was preparing for this session. First, how can digital technologies make finance more inclusive so that small and medium enterprises, SMEs, and micro entrepreneurs presently not served by banks have a better access to finance? So really, it's all about serving the unserved that the banking system have not been able to fully take care of. The second is, how can governments and regulators in Hong Kong and other international financial centers facilitate a bigger role for green finance and indeed fintech? I think the two, frankly, are interconnected. Because of the existence of digitalization and fintech, I think we have a chance to actually develop much more opportunities for green finance. And I'll let our experts talk about that. And then finally, how can corporate ESG initiatives make a tangible, measurable contribution to global economic growth that is inclusive and sustainable? Now, this subject of ESG has been talked about for a long time. Frankly, I think it's still being talked about. I think we haven't really quite gotten our arms completely around it. I'm especially really interested in how this can eventually be brought to bear to make concrete differences on inclusion and sustainability. So, with that, I think I'm going to turn it over to the panelists. Laura, perhaps starting with you, perhaps you could, all of you could perhaps give a 3 to 4 minute, just opening remarks, and then we'll go into discussions. So, Laura, over to you.
Thank you. Good evening, Victor, distinguished panelists, and all the ladies and gentlemen online. Thank you for inviting me to this evening to discuss Asia's role in a changing economy. First, like Victor said, he and I were recently in the Middle East. I will touch on that, I think, in the discussion session. In my introductory remark, I just want to touch on climate change, how the financial market can help address some of the inequality issues, and what is HKEX, the Hong Kong Exchange, role in all of this. I think we live in a world that is more volatile, where geopolitical tension are seemingly constant, and the effects of the pandemic are yet to be fully felt. And increasingly, the need to address challenges like climate change, which is really a topic all over the world in almost all the international forums that we have attended. The climate change and inequality, these two issues are becoming more urgent by the day. It is my belief that in these volatile and challenging times, the world needs more connectivity and not less. Connectivity means working together. It means engaging with all our stakeholders in dialogues, in action, and across border. And that is something that Hong Kong has always done well. Hong Kong has always been a super connector, and connectivity is what defined the city as an international financial center. But how do we harness the connectivity to address the challenges that we face today? Let's start with climate change. About the net zero transition, it is very essential to tackle climate change, which is all requiring substantial financing. Hong Kong's role as a connector between the East and the West, and our robust financial infrastructure and the strong government support for sustainability means that we are well placed to connect capital with climate projects and opportunities. As a regulator, HKEX set standards and guidance for over 2,500 companies to help them meet investors' demand for greater disclosure and transparency around how they plan to meet the climate change challenges. As a market operator, HKEX is also committed to create a sustainable finance ecosystem with the right channels and products to help finance a low-carbon and sustainable economy. We are also creating opportunities for corporates to take part in the low-carbon transition journey, such as through Core Climate, which is a platform that we created last month for international carbon marketplace to trade products. A new channel like these are at the core of what exchanges do all over the world, linking investors with issuers, matching aspirations with action, fueling ideas and innovation. Addressing inequality is about creating opportunities. And I think the financial market is about creating opportunities. And when we talk about climate change and equality, of course, that's where the importance of ESG comes in. I think the global pandemic over the last 3 years have widened the inequality gap across nations, economies, and geographies. And economy and inequality is the biggest obstacle to stability, harmony, and prosperity, like Victor has said in his introductory remark. Capital markets play a key role in connecting capital with opportunities, fueling the growth of the real economy and driving change in societies. Hong Kong is now one of the world's top capital raising center for the companies of tomorrow, and that I mean by the biotech companies, and we are the global home of many new economy companies. These reforms that were launched by the stock exchange a few years ago have funded new ideas, supported entrepreneurs, and created jobs both here in Hong Kong and in different parts of the world. And we continue to look for ways to create opportunities to make our markets more accessible to new ideas, to entrepreneurs who will create further opportunities for those who are underserved. Just a few weeks ago, we published a consultation on a set of proposed listing rules that will allow specialist pre-revenue technology companies to raise capital in Hong Kong. And I think, like Victor said, the AI, digitalization, all of those technology that will help fuel the financial market that will address the need of the underserved. We expect that this will have amplifying effect on the growth of a range of new economy sectors. And finally, we also, at HKEX, also set by example. We are proud as a capital connector, but we also lead example in ESG. We have established an HKEX Foundation just 2 years ago, where we plow some of our profit into community projects and engaging our staff as well as community members to strengthen and promoting financial literacy, diversity, inclusion, environmental sustainability, and poverty relief. I think it is not enough for HKEX as an institution, as an exchange, as a marketplace operator to set rules and regulations for other companies to follow. We must set the example ourselves. And I think I can say that we are proud to play a role in this journey for Hong Kong, for us in addressing some part of the inequality issue. So I will stop there.
Thank you very much, Laura. That's extremely well said. I think the work that you've done at Hong Kong Stock Exchange is just a very, very, very important to really addressing this issue. And I think especially some of the things that you're now doing in actually allowing earlier stage companies to participate. And really the whole situation may in fact revolve around getting capital to where the opportunities are and having a level playing field. But while you're at it, why don't we just have you share that experience that we had in the Middle East? What have we learned there in terms of looking at this issue? And what about from there, what you have reflected on the role that Hong Kong can play, and in fact, in terms of building additional connectivity?
I think, it was a tremendous experience to be in the Middle East after many years. The changes recently, particularly in the Kingdom of Saudi Arabia, has been really astounding. There is a strong desire to understand more Asia. They want, this is the part of the world, when we talk about connectivity, somehow the Middle East and Asia has not been that well connected. Of course, there are many connections, but in terms of capital market, it has been a void. And we identify that as an area that we want to reach out, both in terms of capital, in terms of issuers and investors, introducing our company, our market to the Middle East and vice versa. Mm-hmm. The theme that came out very strongly is, it's not only just about capital market making money, making profit, but really what the conference is about is future investment initiative, which is investing in humanity. And obviously, climate change is a very big issue, very big topic. There are different aspects addressing the ESG issue. And I think Martin will be very happy to see that really every country has a very, very defined climate change program. And the Middle East, they are astounding. They have a lot of capital. What they are doing in environment, they're going to, for example, in the kingdom, they're going to plant 10 billion trees by the year 2030. This is just one small aspect of not only creating new source of energy, but really greening the environment that will reduce the emission. So I came away with the very strong impression that in economies such as the Middle East, they are all concerned about the climate issues, which are universal.
Okay. Thank you, Laura. Yeah, maybe more about that later as well. Mm-hmm. Eddie, why don't I turn to you next? Maybe you can give your short opening remarks.
Sure. Thank you very much, Victor, and good evening, everyone. As you said in the beginning, when we think about the future trends apart from climate risk, the other one is, of course, the digital innovation that we're seeing that holds the promise of delivering better and more inclusive services from the banks to their clients. And we, in fact, started this whole fintech journey some 6 years ago. And we've now delivered a hugely popular faster payment system. We've introduced 8 virtual banks with innovation and also financial inclusion in their mandate, whether when they are serving individual or corporate customers, especially SMEs. And last year, we rolled out our FinTech 2025 strategy as the second phase of our journey. We've got many initiatives there, but there are 2 in particular that draws quite a lot of attention, and both are related or connected to financial inclusion, in particular, the services to the SMEs. One is the central bank digital currency, and the second one is how to use data to better banking services. On central bank digital currency, or CBDC, we have been exploring that on both the wholesale and retail level, but we're actually a little more focused on the wholesale level because we thought that it holds the promise of solving some very long-standing problems of banking. For example, cross-border payment, which is still very costly, very, very slow, and very opaque. So we partner with a few central banks in Asia and in the Middle East 2 years ago to start a project called mBridge. And our partner central banks includes the People's Bank of China, the Bank of Thailand, and also the Central Bank of the UAE. And the project is coordinated by the Bank of International Settlement. The purpose is simple. We want to use the blockchain-based CBDC, multiple CBDC platform to make cross-border payments more direct with atomic settlement so that it's cheaper and faster. And we did some pilots already. And it proves that by using this platform, the processing time for cross-border remittance can be reduced from days to just seconds. And the cost can be half at least. And we just finished another pilot in the last 6 weeks, basically partnering with 20 banks in the 4 jurisdictions that I mentioned. And they're putting in real life, real value transactions for their clients through the system to test whether it can be really done in seconds. And that test was very successful. So we're now moving on to the next stage, which will be more about governance and business issues. For example, how to make sure that we've got sufficient on-chain FX liquidity, how to make sure that we can harmonize the different, for example, AML standards in the jurisdictions. And very shortly, we hope that we can develop a minimum viable product before we think about commercializing the arrangements. But in the meantime, we're also getting more central banks into the platform because for a system like that, you need scale, you need the network effects. Currently, we've already got 9 observer central banks joining the pilot, including 4 from Asia, 1 from the Middle East, 3 from Europe, and also 1 from the US. And we're inviting those who are interested to get into the next phase. And we're very hopeful that if we are successful in launching this platform in future, the cross-border payments, especially those that are necessary for trade settlement, for trade finance, which many SMEs are dependent upon. We hope that it will be made more transparent, faster, and cheaper. So that's one area that we're working on. The second focus that we're working on, which is also related to SMEs in a more direct way, is how to use data to help the data owners, the data subjects, including the SMEs, to make use of their own digital footprint to access bank loans faster and cheaper. As you know, with the advance of artificial intelligence, more banks are moving towards data-driven credit assessment. But in order for that to work, they need data. If you look around, current data is just scattered around different data providers. It's almost like isolated data islands. And if banks want to access different data of their client, they need to establish very complicated one-to-one connections, and it's very costly and time-consuming. So the idea is very simple. We want to build a common data infrastructure that we call the Commercial Data Interchange, or CDI, that will replace all these compartmentalized one-to-one connections into a many-to-many connections, with the CDI in between, serving as a one-stop shop for the banks. With the consent of the SMEs, the banks can access all the data that's related to the SME that is available. And we did a lot of pilots with already 900 loans approved through the use of all these data. And this data include things like trade declarations, procurement data, payments data, or the e-commerce sales data, things like that. And we see that most of the people using the pilot are actually SMEs and not the big corps. And so we just formally launched it 2 weeks ago. And we've got all the 23 major retail banks and also 10 major data providers in Hong Kong participating. And we hope that more traffic will go through. But down the road, we've already got the government support to put in certain important government data into the system, including, for example, companies registry data or inland revenue data, the tax data, so that in future, the banks can actually access all these data in one go. And there will be more, we are also, with the government data source, we're also exploring another thing, which is if we've got the golden source of companies, can the CDI also serve as a KYC utility for the banks, so that in future, the bank will just have to access this common platform without having to ask for complicated identity proof from the various SMEs. So with all that that was put into the CDI, we hope that it will gradually develop into a platform which can help the SMEs to get their loans without having to provide very tedious financial statements or without having to provide collateral before they can get a loan. The experience is that the loan processing time has been cut from weeks into just days. And the cost of their loans the terms of the loans has actually improved a lot as well. So I think there's a lot more that we can do through the use of technology and data to allow banks to offer better and cheaper services to all, especially the unserved or those who are paying more expensive banking services now. I'll stop here. Thank you.
Eddie, that was really excellent. I think this is really good news for our SMEs. I think for the SMEs, it's really all about access, isn't it? And the cost of access. What you're really doing that is leveling the playing field for the access. And maybe Sam, later on, I know you've done a lot of work in this area, how technology has really enhanced the ability for Eddie to do the things that he's doing today. But Eddie, before I let you go, very quick question. You talk about virtual banks at the beginning. Virtual banks as a group, would it really provide a great opportunity to open up the SME sector because we have virtual banks and the increasing use of digitalization? What do you think about that?
In fact, the virtual banks are, in a way, pioneers in terms of using technology to drive banking innovations. For example, the data-driven credit assessment that I talk about, the first adopters are actually the virtual banks. And they are the ones who are using data to provide much quicker and cheaper loans to the SMEs. And for the CDI that I talk about, the first ones on board are also the virtual banks. So they are the ones trying to open up the SME sector by using data. And that induced the other traditional banks to follow suit as well. So I think it's actually a good sort of stimulus or catalyst to digitalization.
Oh, okay. Then this catalyst effect is also very good news for the SMEs. Okay, Marjun, let me now turn to you. Why don't you make your short opening remarks?
Thank you, Victor. Can you hear me okay?
Yes, very well. Thank you.
Great. Well, thanks again for inviting me to join this important conversation. As you said, I am involved in different aspects of the green sustainable finance, including that in China, in Hong Kong, and also a lot of international initiatives. Now, today I'm going to talk mainly about the G20 transition finance framework. The reason I'm talking about this is really it was just approved by the G20 leaders in Bali, Indonesia, back 2 days ago. And I, in the capacity of a co-chair of the G20 Sustainable Finance Working Group, has been working on this document for the past 9 months. So I'm really glad that it's been endorsed.
Congratulations.
And becoming, I think, a very major document that's going to guide the international work on developing transition finance framework. Now, a lot of you will be asking, we heard about green finance, sustainable finance. Why are we talking about transition finance? Now, the reason is that despite the fact that green sustainable finance has grown rapidly, in China, we now have 20 trillion RMB outstanding green loans. And globally, I think this year's green bond issuance reached $1 trillion. But still, it's far from enough to meet the climate change and also many other needs arising from SDGs. And one of the reasons for the capital shortage for sustainability is that so far the green and sustainable financial system has allocated resources only to pure green or close to pure green activities and has not helped enough the transition activities, namely the activity undertaken by carbon-intensive companies to move towards net zero. Now, what do we mean by carbon-intensive companies? We're talking about companies in sectors such as steel, cement, petrochemical, coal-fired power generation, transportation, building, and so on. And many of these companies in these carbon-intensive sectors are being viewed as by banks and other financial institutions as polluting, carbon-intensive, so I need to reduce financing for them. But the reality is that most of these companies need money for their transition towards carbon neutrality. Without money, they're unable to transit, and we may actually see more problems arising from these companies lacking financing, including financial risks and also unemployment as a result of the transition. So that was the background for the G20 discussion last year, which decided that we will do a transition finance framework this year for the different jurisdictions, regulators, and also the financial markets. So we just had this document. I hope you will read it. It's online in many websites, including the UNDP website, which is hosting us as secretary of the G20 Sustainable Finance Working Group. The 5 key pillars of the framework are the following. Number 1, we need to have a methodology to identify transition activities. In China, we are using what we call transition taxonomy to define what transition activities are. Namely, we will create a list of these transition activities for each of the carbon-intensive sectors, for steel, cement, petrochemical, and so on. These are the pathways which are listed in the table. And if you find your pathway in the table, you can recognize that activity as one that's to be financed by transition financial instruments. The second key pillar is disclosure requirement. That's actually stronger than the previous requirements for many other green companies. In the G20, we're asking transition companies to disclose information related to their transition plan towards net zero, their carbon emissions, scope 1, scope 2, and if possible, scope 3, and governance in terms of how you're going to implement your transition plan, and many other pieces of information. Also, we are advising different jurisdictions and markets to develop more instruments to support transition, not just debt instruments that we see in the past years, but also equity, insurance, and the risk mitigation products and so on. And also government allocating incentives to make these transition activities more bankable. And finally, the pillar is called just transition, which is very much to your point of financial inclusion. Right. Because during the transition process of many of these companies, I think there's a risk of they laying off people. And they could also create other social problems such as energy shortage and inflation and so on. But just take employment as an example of how finance can help tackle this issue. We are providing an example in the G20 report saying that if you're a financer, for example, bank or investor, and you want to finance a transition company, and you need to ask this company to assess whether the transition will lead to unemployment. And if there is a big unemployment problem, then the company will be asked to develop reskilling and retraining program to mitigate that social problem. And if they do that, the financiers have to award them by giving them slightly cheaper funding. So that's how finance can participate in ensure just transition, which is, I guess, a new way of delivering financial inclusion. Let me stop here, and we love to discuss more details and implications for Hong Kong.
No, thank you very much, Marjorie. That is really wonderful news. Not the least of which is this tangible agreement coming out from the G20 at a very opportune time, at a time when the geopolitics are in the condition that we're in. I think any sort of breakthrough like this, I think that will actually get the major powers and major economies together in a common goal. I think it really bodes well.
Just to add that...
so congratulations for making the breakthrough.
Victor, just to add that this working group, namely the Sustainable Finance Working Group, is co-chaired by China and the US. And I'm representing China and Larry representing US. It's a very good example of still a live collaboration between China and the US.
I think this is the live example that we're really looking for. So my really very hearty congratulations. I'd like to ask you one question again before I let you go. How can smaller and medium-sized companies, SMEs, really take advantage of this framework? And what would be the impact of this framework on the smaller companies?
A few things in the framework will actually help SMEs to assess the capital markets and getting transition finance. One is the transition taxonomy. If we have a taxonomy, which is a list of easily identifiable activities for transition finance, then a bank can say, hey, this company is applying for funding for this type of transition activities, which is listed in the table, and that's been authorized or endorsed by HMA, maybe by Eddie. And so I'll be feeling more confident that this is not transition wash, and I'll be offering this product with confidence and probably with lower funding cost. Okay. And secondly, as you said earlier, digital technologies need to be applied to any applications in the finance industry, including transition finance. If we can, get data using digital technologies for SMEs to explain their green performance, including carbon emission and the decarbonization process, then it will also help them to obtain transition finance from the financiers.
Okay, thank you, Marjorie. You mentioned also the magic word, digital. And I cannot think of a better father of digital than Sam Amisano. Sam, let me turn to you. Maybe you can give us a historic perspective of how this whole thing could be supported through the digital framework, and then a little bit about what may be in the future to continue some of the progress that all the other panel members have mentioned.
Yeah. Well, Victor, thank you, and thank you to our colleagues and their thoughtful comments. I'll try to take technology and thread through what they're trying to accomplish, but I'll do that through phases of time. And Marjorie, I want to really congratulate you for your work on the G20, because it is the most pragmatic explanation for finance for the transition that I've heard of. And I was on the ExxonMobil board for 15 years. Okay, so I mean, hats off to you, right? Because the issue is the intensity of the users. It's not necessarily automotive EVs. That's a solution, but you've hit the key elements. There's no alternative at this point in time, and a lot of research and investment has to be made. But let me start in time, and then I'll work my way to where you were at the end there. let's look at the past 3 years, then I'll take like maybe the next 5, 10, then I'll go beyond that to Victor's point and kind of how this thing, and the things that you guys are working on are really on the, I'll call the 5 to 20 year period of time. You're at the early stage of that from a technology lens. But I think if you look at, let's take the pandemic and the disruptions over the past 3 years, you all know the obvious winners and losers. The winners in this were the companies that were digitally more enabled than the ones that weren't. And there's lots of examples of that around the world. Big tech, e-tailers, Prime, Amazon Prime, et cetera, work from home, entertainment in the home, media content now being distributed over the web, et cetera, et cetera. They were in healthcare as well. I can go on and on and on, but the companies and the economies that were farther along in digitization, everybody was impacted, but they did slightly better. And their populations did somewhat better. And for example, look at GDP. If I correlated to GDP, you take countries like US, China, and India, clearly did better than their colleagues in Europe. They're farther along in digitization. I mean, we did the studies in my organization on platform business models, benchmarking the world. And Europe was in last place. Even Africa was ahead of Europe. So fundamentally, you could see this show up when a crisis hit. So let's go to the 2021, which is, okay, supply chain. We all know what happened there. We know when demand and supply got out of balance. We know what issues as far as constraining supply, whether that was zero COVID policies or logistics issues, et cetera, et cetera. When you constrained supply and you had demand because of all the fiscal provisions that were necessarily provided by government, you have what we had, which was these constraints, which, as we all know, led to some of the inflationary environments we find ourselves in today. But put on top of that, in 2022, we have a war. Okay, right? So if this wasn't hard enough, now we have a war going on at the same time. So it's all those constraints that led us to this environment. And it's why I think I'm going to give you a thread of why technology, I'm establishing this pattern, is a solution here. But I mean, we know that hopefully at this point in time, inflation will abate, war will get settled. Hopefully that's sooner than later. But what will return? I mean, we've learned in the past 3 years, it's not going to return to what it was before. Now, what it will return to, I mean, it's anybody's guess. I mean, if people that think that they know, I mean, it's like trying to guess when the recession is going to start in the United States. I mean, they range as anything from yesterday to next year to the following year. I mean, you can debate this till the cows come home. So I don't think anybody really knows, is my conclusion. So the question is, okay, what can you do reasonably, understanding that things will be different than in the future than they are today? So let's just look at, take the energy. I mean, we all talked about green investments, the energy transition. Fundamentally, what we have today is an issue where we have demand increasing because the economies are now coming back, and we have supply being constrained. Obviously, the war is an element of that, and then policy is an element of that, and financing is an element of that. Right? So you can't have demand increasing and supply constraining and be shocked that prices are going up. The energy industry is a macroeconomic environment. I've seen 50 years of models. That's what it is. And so when you get these imbalances in place, the price of fossil fuels, whether that liquids or not, or natural gas, go up. That's what happens. And so fundamentally, this is where we find ourselves today. So there are solutions to the transition, but you can't cut off supply. To Marjan's point, you have to deal with the issues of supply to make the transition so you don't leave the underserved the most impacted by it. There's solar, there's wind, there's EVs, there's batteries, there's all these things going on that are going to be wonderful in this transition, but they aren't at scale today. Even if you give them economic investment aid to governments, what have you, you have to get them to scale to offset the other energy sources as they exist. And that's primarily, the transition fuel is not coal. I mean, that is not a transition fuel, as we all know. However, the emerging countries have gone back to coal because of the pandemic and the issues that they face around the supply problems again. The transition fuels tend to be in the areas of LNG, hydrogen, and quite honestly, nuclear, but nobody likes nuclear. But there are transition fuels that operate at scale that can transition you. And these high intense energy industries that Marjan referred to, there is no solution. Sun and wind and everything, batteries are not going to solve a guy making steel or producing cement, et cetera, et cetera. And that's not the solution. So you have to come up with these transitional plans that invest in the technology that get you to the future state. So that's energy. I think that's going to be the biggest driver of this economic shift and societal shift, the green energy transition in the next 10 years. I'm going to jump to my old world, which is the world called information technology, which I know a lot more about than, say, carbon sequestration and things like that, right? But going to that part of the world, if you go through the history of technology, it's really quite simple. I mean, it started with basically automation of enterprise. And they were big computers, mainframes, and they went to these smaller computers, go client server. Most of this was ERP and back office stuff. I mean, that's pretty much what it was. Even in finance, it was mostly the back office stuff that was done within the financial system, as we all know. So then what happened as these technologies evolved, i.e. the internet, digitization occurred. So it expanded into consumer spaces, which was primarily about content access, e-commerce, frictionless transactions. So when Eddie's talking about frictionless transactions, this is what he's referring to, basically, where we are today. It's frictional. Now, there's limitations to frictionless transactions. They're much more efficient. They're faster. I'd say the quality many times is higher. Think about retail. Obviously, Eddie talked about the financial sector, but let's talk about retail. I mean, clearly, the fact that you could order something in Korea or in America or in India or in China and have it there the next morning is phenomenal. And whether that's a combination of Alibaba and Tencent or Amazon Prime in the States or Cart in India, whatever it happens to be, Compaq in South Korea, if I'm not mistaken, right? All those things are available to you. So you can see the benefits to that, and obviously costs are driven down, service levels are up. But that's kind of where it is today. And that'll continue, and that will solve a lot of problems that we are faced as far as SMEs are concerned. Because if you think about the fact that they could actually engage in both elements, Victor, I mean, the funding's for their growth, which is their challenge. And then the other piece is connecting to their logistics as well as their customers. That's the other part of the challenge that you've worked on for your entire career, as you well know, is connecting those two things. So there's multiple challenges for SMEs in this thing as they continue to create and then expand. But the future of where this thing goes, and now I'm going out in time, but you've alluded to this when you talked about, I'll call it the constellation of data sources, right? You heard this from all of our colleagues, the constellation of data sources. Because today, the way data is structured, it's entirely fragmented. So, I mean, when you optimize transactions for this digital transition, they were very, very narrow. But when you talk about creating these large data sources, it's huge amounts of data. It's very, very horizontal in nature. And then you take the data, and you've heard this again from all of our colleagues, Victor, you apply intelligence to it. That's called AI. You take all these multiple sources of data, call it a data lake, if you want to use the term in the technology industry. It's a constellation, it's disparate inputs. So I believe Eddie talked about forming this organization in between so all the banking systems can use it. I would make the same argument that in your supply chain world, do the similar thing. So you have this data source, maybe Hong Kong could be the location of it because it's the Switzerland of these sorts of things. And then everybody, SMEs, logistics companies, merchandising companies, retailers, et cetera, have access into that data source for the future designs, transparency of their supply chains, blockchain level of secure transactions and payments, et cetera, et cetera. So that's what we're talking about. But you take that on top of these large data sources, you put AI associated with that. Now, AI has some negative implications. It doesn't have to be. Everybody says it's going to eliminate all jobs. It is not going to eliminate all jobs. I mean, you're always going to have teachers, farmers, nurses, plumbers, scientists, writers, legislators, retailers, of course, a lot of lawyers and a lot of politicians. I mean, so you got lots of jobs out there. But the nature of the work is going to, lots of bankers, right? The nature of the work is going to change because it's going to be more about decision making, which is versus just transactional stuff like digitization. So it's breadth. It's the breadth of the jobs is going to change versus then the depth of the jobs. Mm-hmm. So I'm sorry, it's the depth rather than the breadth of the job. That's what's going to happen in this thing as they be connected. Now, it raises all sorts of questions, and we can pose for that, but I'll just give you a couple, which are really, really important. For example, the data. What's the quality of your data? We call it cleaning it up in the technology industry, but what is the quality? Are there data standards? I mean, we talk about everybody wants to share the data, but the data is in all these different formats. There are no standards to share. It's like what had to be done on the internet, not to get too detailed, but you had to create the protocols so that transactions could flow. Same with the banking system for currency movement and the like. You had to create those protocols. We have to do the same thing for the data quality. On the AI system, you have to know the accuracy of the algorithms that you're using. And is there bias in those algorithms that you're using? Can you explain how you got to these answers? If you decided, Eddie, not to make that loan, or Manjan, how not to make that loan, can you explain it based on an ESG perspective versus just you flunked them because they live in a bad neighborhood? And that's kind of a U.S. example, by the way. If you live in a bad neighborhood in the United States, it's pretty tough to get credit, right? So it has nothing to do with who you are. It happens to do how the credit systems happen to work. But so my point is that where are those biases? How do you address those biases and those sorts of things? And I'll leave this as one point, Victor, which I think talks about future investment. Not that we're trying to, you could provide some money to us, Manjan, if you'd like. But we've created this thing. It's a nonprofit evergreen fund in the United States. We hope to raise the first fund at $500 million. We think we'll get a couple billion by the time we're done. But it's going to focus on future areas for research and technology to solve the problems you're explaining. The energy transition, biologics, quantum computing, semiconductors, because semiconductors are basically the fabric for all this stuff that we're talking about. It has to run on something called a chip, and then cybersecurity. But the idea is, so if you think about this, what's evolving here, we'll talk about the West and the East. But China has currently out-invested, if you say the United States, in these spaces. I think a couple of years ago it was almost, I recall, $1.9 trillion or some significant amount of money in these future spaces. But if you take Europe, Japan, and the U.S., it's actually equivalent to, if not larger than China. So if there are two, the point of this is not to say that this is bad. I think it's actually good because competition will spur innovation. So in the world that I live in, this is a big positive, right, that these things are occurring. I understand in the geopolitical world, it's a big negative, but to the guys of us who've grown up in technology or in research, think this is great because the more you spur in competition, the more creativity, the more engagement with the academic institutions, the better outcomes you get. So I'll leave it with that, Victor, and I'll turn it back to you. Okay.
Well, thank you very much, Sam. I think now that we've heard from all the panelists, first thing I'd like to say is for all our audiences, if you have specific questions, please send them in now, and you can really send it through the Zoom system and so on, and we'll be collating all the questions, and I'll be addressing them to the panel. Before we do that, turn it over to the questions from audience. Let me just think this through. Now, look, we really have had an incredible insight from all of you on where we're going and all the things that are potentially helpful to the SMEs. But what I'm really quite concerned, if I am an SME trying to participate in this global economy, that all this is actually going to favor the big companies that have the ability to invest and ability to use the data. You have the AI and the mechanism. And, how do you actually protect my interest? Do you think that we need to have some regulations and setting some standards that would actually ensure a more level playing field in the digital arena for all? I think, this is something that I certainly would think about if I were SMEs. on the one hand, I can take advantage of the other hand. This may provide a tool for the big guys to completely bother me. So what do you guys think about that? And Eddie, I'm sure you thought a lot about this. What do you think? Maybe starting with you first.
Well, I think there will be a need for some common infrastructure or common utility that can be applied or just used by smaller firms. The CDI that I talk about basically level the playing field between the big banks and the small banks. They will have the same access to the same sea of data that they can use. And for the green transition, it's very similar. What we are doing now in Hong Kong is actually a few pilots that I think will be interesting. Ma Jun talked about the importance of data when you need to, for example, assess the greenness of yourself so that you can produce this data to the banks in order to get the financing. But for smaller firms, for SMEs, it's extremely hard for them to calculate any carbon emissions. So what we are doing now, trying to do, is to engage a research institution plus the university. First, we've got all the scientific institutions to sweep their data, Hong Kong data, whether it's drainage, flooding, etc., to a central repository. So we have a central pool of data. And then we asked the research institute to use some global data together with the local data to come up with some data analytics utility software that the SMEs can just pick up and punch in certain basic information about what you manufacture, the volume, the sector you're in. And then the model can give you a rough estimate of the carbon emissions, so that you can put it to the bank and to say that, hey, this qualifies or do not qualify as green or transition. And if the regulator accepts that, that will make it a lot easier for the SME. So I think there will be a need for some either common infrastructure or utility technology like this that can be just picked up and used by SMEs in order to level the playing field, at least to some extent that you mentioned.
Yeah, it's really all in the sort of setting standards and leveling the playing field. And indeed, Ma Jun, maybe on a G20 international basis, how do we actually move to that sort of area?
Actually, at the G20, we discussed the issue of how to address the ESG information disclosure issue for SMEs. And we want to make sure that the SMEs will be able to report ESG or sustainability-related information at a lower cost than the current perceived costs. Now, in China, there are a couple of real examples of how cost of reporting can be lowered substantially. For example, Huzhou Bank, which is a local bank in Zhejiang province, has developed a ESG rating system with the help of my team to assess SME ESG performance with 70 different indicators. And most of the information collected by the local governments, from Environmental Bureau, from power company, from water company, from tax authority, from agency in charge of production safety. So the company doesn't have to do anything, and the bank would know the aggregated ESG performance from this database. And the same thing is happening at the national level with the China Construction Bank. Again, my team is involved in producing something like that for a larger bank, which is focusing not only on large companies, but also serving to a great extent the smaller companies. So I think technology methodologies are now becoming available and just need to be more widely applied.
Okay. Will the software... Sorry, go ahead, Lauren.
On a very different and smaller scale, HKEX runs an ESG academy for the SMEs so that they would learn the very basic nuts and bolts. When we say we want disclosure, you have to disclose in your annual report. What are they supposed to disclose, and what can they do in small steps to satisfy the ESG requirements? So the ESG Academy has been quite popular. It's an online, and it's free for our listed issuers.
Very good. Sam, do you have any thoughts on this?
Oh, yeah, I just give you an observation, Victor. I think, there's certain areas. Let's talk about, I'll give you a contrast. What don't we like about the large large social media companies, right? And then we do argue, do you break them up or not? What we don't like is the fact that they were able to get massive scale of data and apply that to their model, which is advertising. I mean, we talk about all these other things. They make all their money in advertising, okay, right? And whether that's a huge societal issue or not, we can debate, but I don't know. I mean, whatever. Let's put this aside, though. Talk about areas where these utilities actually could do good for society, like Eddie's referring to, like Manjan's referring to. I believe there's a role here for, I'll call it private-public cooperation to create these data hubs or these utilities, right? And the reason why I say private-public is, at least my experience, that if you put it strictly in the public sector, they don't have the expertise to do this well, right? The expertise does exist in the private sector and sometimes in the universities, but you have to have this consortium to come together. I do believe, though, that, I mean, for me, being a capitalist, to come up with something that's more of a progressive solution, people finally said, this guy's lost it. But having been around this for a long time, I really do believe the solution takes these issues. Take, for example, healthcare and pandemic. If there was this data source with sharing of information around the world, you could model and project where these viruses migrate. We did this in modeling at IBM Research. You can do it with weather, You can do all these sorts of things. The problem is the data sets are too small and they're fragmented, as Eddie referred to in finance. And so, if you want to be able to have economic development funds for SMEs, you could create this source that Eddie's talking about, like we did in credit in the old days that led to privatization of the credit sources. Like in the United States, it's Equifax, the first data analyst for the guys, right? But my only point being, if that makes some sense, I think there are areas where there's a requirement for this non-profit-oriented collaboration that combines all the various groups to come up with these large data sources. Now, why is it good for SMEs? Then they can participate. Now you're just down to the innovation, because everybody has access to the data. So whoever innovates the fastest, if you're a fintech, if you go faster than a large commercial bank, you're going to do better. I mean, that's just the way the world works. In my view, it's just, if IBM is faster than the market with a product like Watson and Jeopardy technology, you're going to do better than the guys that are 3 years behind you. So that's how I would think about it.
Well, I think you guys are really putting your fingers on all the key things. One thing I do see is, in addition to the availability of data to analyze very complex situations, I think speed is also of the essence here. To compete in the global world, now you really, the clock speed, the speed of response. For a smaller company, really it's very difficult because you don't have the know-how and the technology. If so, somehow in creating these networks and so on, that we're able to actually not only give access, but give very quick access, then really that will be of great help. Another follow-up question that I like to just ask the panel before I turn to the questions coming in from the audience. Again, Eddie, you mentioned earlier that, if I'm a smaller company, I'm able to contribute my information. That is really my collateral for me to actually get access to finance and so on. And I'm really glad that because of this development, that we are now going into a world in which you're not only giving loans against collateral, which means if I'm a small company, I'm forever behind. How do I catch up with the big guys? Because they already have accumulated the assets to get the collateral and so on. So I will be very concerned about my asset collateral. How do I actually maintain that ownership once I put it into these pools? And how do I go about enhancing my data asset, if that's the way to put it, my digital asset? Well, when you have systems like this, so I'm just wondering, and then because that to me is the basis in which I, as a small and medium-sized company, is going to compete.
Right. Well, first of all, the whole system is consent-based. So the small company has to give consent to the bank in order that the bank can access any information that he has. And also, there will be privacy protection around the whole platform. We've been consulting with our Privacy Commission here to make sure that all the privacy protection will be there. So without the consent, the data won't be used by any bank or big tech or other companies. So I think this is important, whether you're thinking about infrastructure like that, or whether you're thinking about in future the use of central bank digital currency, because by definition, those new development can be traceable in terms of usage. So privacy, holds a particular place in all these innovations, and I think that is absolutely important.
Marjorie, you have any thoughts on that, or Laura?
Victor, just one comment on your question on speed. I guess you're talking about the SMEs, getting financing with speed. Now, if that's a question, there are a lot of interesting examples in China's what we call regional green finance pilot program, including Huzhou, Lanzhou, and Chongqing. And in all of these places, they set up a digital platform for matching the demand for financing from companies and the financing from banks locally. And you can match these requests with actual financial resources within hours. Instead of having one company running around to see different banks and getting money within a few months, I think this speed has enhanced massively. It's like a DD taxi matching system. If you request a taxi, multiple taxi, namely the banks, will actually raise their hand and compete, for this order. That's what's happening in China already.
Okay, excellent. Thank you. I think there's only about 10 minutes left. Time has really passed quickly. Let me now turn to some of the questions that come in from the audience. The first one I'm seeing is, how do you define green? Is there a risk that if this definition is done by the advanced countries, then it will only benefit the advanced countries and the bigger companies?
I think this question may be for me.
Yes.
We have green definitions in developing countries like China. We now have in China 3 sets of definitions, one for green loans, one for green bonds, and one for green projects. In Europe, they have a definition which is called Sustainable Finance Taxonomy. In fact, between China and Europe, in the past 3 years, we worked together and created a new standard, which is called the Common Ground Taxonomy, that defines a list of activities that's recognized as green, both by China and Europe. So there are lots of different definitions available, and clients can choose the one that's really suitable for them.
Okay. Yeah. Anybody else with a thought on this? Yes, Eddie?
I think the Common Ground Taxonomy that Marjorie mentioned is very helpful. And in Hong Kong, we are going to build on that basis. But still, when you look around the world, Europe and China have got a common set, which is more the overlapping part. Okay. But when you look around the world, there's still a lot of different taxonomies. It's still a little confusing at present. And it will be even more difficult for transition finance in terms of taxonomy, how you define it, and whether there could be a global standard for all these taxonomies is something that I really look forward to.
I think if I could add, Victor, if I could add, I completely agree with Eddie. It's in addition to taxonomy, we've been talking about harmonization of some basic standard for years, and we have yet to see. I know that, for example, different industry, they have different standards, but you would hope that certain industry will have a more universal global standard. Some of the major or rather the key and basic standards that could be articulated, that would help. But we have yet to see that. I mean, work by the IFRS and some of the other global institutions have been helpful, but there has not been any consensus as of today.
Sam, if I may, just to add one point following Eddie's comment on this Common Ground Taxonomy, which is currently an agreement between China and Europe. And in the future, I'm hoping, in the capacity of a co-chair of this taxonomy working group between China and Europe, to expand the basis for comparison. Namely, we will have not only China and European taxonomy as a basis of a common ground, but also include other countries' taxonomy And we're seeing actually interest from quite a few countries joining the new basis for future common ground taxonomy. I think that could pave the way for a more sort of interoperable taxonomy for the global green finance market.
Well, that's really very good news. How is this issue handled, and how do people look at this issue in the U.S., Sam?
Well,
and will the U.S. be joining into a global, taxonomy?
Victor, to be honest, I think the U.S. obviously should. However, I don't know the status of where the U.S. is, and maybe Marjan knows the status, but he's being polite. I would add, though, I'd add some perspective on technology standards that have evolved. If you put this in the category of a standard of technology, take, for example, the Internet standards for communications, or dial tone. Dial tone is a standard for global communications, et cetera, et cetera. They evolved through standards groups. There are international standards groups that everyone joined in, like encryption. There is today IBM in China, US and China and Europe were all part of these encryption definition standards and those sorts of things. So there are international bodies that push these standards through. And I think that's a mechanism. If you take technology industry and the banking industry, by the way, these guys know it's the same sort of thing. A lot of standards evolved because the banks came together with the regulators and created the standards. Technology wasn't regulated, so it was done by the industry itself because there were no regulations per se in the tech industry. So I think there are bodies that exist. The problem with it takes a long time. And unfortunately, the clock is ticking when you talk about the energy transition and green.
Mm-hmm. Yeah. Time is really running on. I think I just have time for one last question. And I've got a number here. I think one that I think maybe we should actually be a good note to. It's really very, very encouraging that we're doing all these things in green finance and really ensuring that the green financing creates jobs and helps the SMEs and so on. But, if we go and really look deep into the impact of climate change, it's really the poorest everywhere that is affected the most. So there's really the issue of climate injustice. How can we, in doing what we're doing, like the framework that you're doing, Marjan, in the G20, and all the work that, Laura, that you're doing in the exchange, and Eddie, and I know, Sam, you've been doing a lot of public-private sector work, that we ensure that there's the climate injustice issue is addressed, that the people that are most affected by global warming is really a part of the equation, at least.
Victor, if I may start first, I think there are public finance and private finance perspectives. On the public side, there are a lot of discussions on OECD countries supposedly to provide $100 billion per year to developing countries for their climate action. And these commitments have not been met in the past few years, despite the commitments. So that discussion is still going on, and I think will continue for many years. That's what I call the public side. But the private side, I think, may be able to do more than the public, negotiation discussion, because the scale of private financing going to climate action sustainability is much, much larger than public financial resources, and could be 10 times larger if we can mobilize private financing properly. And that's why within the G20 Sustainable Finance Working Group, we are discussing option to scale up sustainable finance for developing country and even very low-income country through mechanisms such as de-risking facility and blended financing. And I think next year, under the Indian presidency of the G20, we're likely to devote more attention to this topic on how to scale up, for example, MDB's de-risking facility so that they can crowd in more private capital for emerging market climate action.
Okay. Yes, Eddie?
Quickly, to add on to what Marjan said, we have been participating in some of these MDB's de-risking programs. I think it's extremely useful. The focus is on not only emerging markets, but also frontier markets. And they've got the experience. For example, IFC blended finance is the next thing. But what we are also doing, because we are also an investor for the exchange fund, what we are also doing is to really look at the equity parts. And we are talking to some of our partners to see whether we can group together a few Asian pension and sovereign investors together with, let's say, some of the private equity firms specializing in infrastructure to provide financing for Asia for transition. And I think that will help enormously to really, again, as a catalyst, to get the market off, to tell people that, hey, these transition projects are actually investable, bankable. I think that's actually one thing that we're exploring and looking into.
Well, that's very good news. Laura, any
I think I echo both Marjin and Eddie's view, and I'm very glad to see that there is more the trend of blended financing. I think in the early years, we talk about common approach but differentiated, common goal but differentiated approach, and that has to be the case. We have a common goal, but not everyone could be held at the same pace and doing the same thing. So when you're talking about addressing inequality in terms of climate, some of the developing country has to have a different approach, but there has to be a common goal. And that will be helped by the private sector financing as well.
Thank you. Sam, you always have the last word.
Well, you're very kind to say that. No, I think everything's been said, Victor. I would just say that, there are, I'd add a constructive comment as far as the developing world. I mean, take the bigger problem of climate change. You got to get off of coal. I mean, we understand why that's very hard in a developing country because they don't have an inexpensive source of energy. So that's all very valid, right? Having said all that, there are private foundations like the Bloomberg Foundation who's is going to put significant amounts of money to help these emerging countries get off of coal, kind of coal facilities. I think there's also a role for the international community here to help get these countries off of coal. You can take it to water as well. There's huge issues around water. As you know, in the Middle East and Africa, there are serious issues, and most of those societies are agrarian. So I think there's definitely a necessity. There's a necessity, I think, where governments have to come together and invest in those. If we're going to solve this problem on a global scale, both water and in coal, you have to get them off of coal and have more water, desalination, those kinds of things available.
Right. Well, I think we've come to the end of our session, but I must say, I, for one, learned so much. I must say, coming into the session, my thoughts were this is really a large, intractable issue that's getting more and more complex, exacerbated by the pandemic and so on. But after listening to you guys, I must say I'm a lot more encouraged. There is stuff being done. I think I see a convergence, and I really see some light at the end of the tunnel. And I think with that, I'd like to, just on behalf of all of you in the audience, thank our distinguished panel. Thank you very much, guys. And I'll turn it back over to Al. Al?
Yes, thank you very much, Victor, and thank you to the panel for a very interesting, insightful discussion. We will now have a short break to allow everyone to reset. We will be back at the top of the hour for our session on deglobalization. So please stay tuned, and if you want to take a break, come back online, top of the hour. Thank you.